Hi, everyone. My name is Nkem Ezeamama. I am an ER physician. I'm based out of Nashville, Tennessee, and I'm the CEO and founder of Phoenix Capital Investment. So I'm here with Bob Fraser, and I wanted to tell you a little bit of a little story on how we met, and then I'll let him introduce himself. So when I started real estate investing newly, one of the things that I wanted to do was network, go out and meet people. So I was at a conference one weekend, and I was standing in line because I didn't go with anyone. So I was by myself, and I was like, I have to eat lunch. And so I was standing in line, eating lunch or getting ready to buy lunch when two people left the line, and then Bob was there. He had just quickly said a quick introduction and told us a little bit about himself at the conference. So it was really awesome till I'd be standing next to him. But I didn't know much about him or his story. So we just struck up a conversation, and the line was really long. And in that little bit of time that we had, Bob just asked me who I was, what I was doing, why I was here. And he was just really, now that I realized that he was trying to get at my purpose. But as we continued talking in line, we got to the front of the line, and he looked and he said, why don't we just have lunch together? And that turned into a really impactful hour that I got to spend with him. He shared his story with me. He shared where he was going in life. He shared kind of all the ups and downs. And I remember in that he gave me a lot of value. Even in the short hour, he directed me on where he just felt that I should be going. And before that hour was over, he asked me for my phone, and he put in a website, and he said, hey, I'm coaching a group of people, and I think that you would have a lot to benefit from it. And he's like, you should come. And if you know me, you know that I was terrified. I was like, I don't know this man from anywhere, and I don't know where I'm heading to. But I just kept thinking about it. And I felt like when doors open, you just walk through it with faith. And that's what I did. And I showed up in a weekend in Colorado, Breckenridge, Colorado. And I just learned, I didn't even know really what it was going to be about, but he taught me about business foundation. He taught me how to really think through my vision and values in order to thrive as an entrepreneur, because that's where he felt that after he heard my story, he realized that's where I was going. And really, it was the beginning to something great. And so not until later on, I realized how much wealth that Bob had built, and that he had built several 9-figure businesses and was a published author, best-selling author. I didn't know all of that. I just met someone who was like, hey, let me teach you a thing or two about business and about entrepreneurship. And that's where this all started. And so when I told him about our bi-monthly webinar, I said, hey, can you just come share some knowledge? I know that you're an expert in all things business and alternative assets and how to grow wealth, really. And I said, why don't you you've impacted me so much. Why don't you just come share this with the people in my community, in the Phoenix Capital community? And of course, without hesitation, he said yes. And so I'm just excited to be here. I'm excited that we'll get to spend this hour together and just pull some really good nuggets from him and figure out really how we can grow wealth and how we can make a difference, because I think even more than wealth is impact, and he'll tell you a little bit about that. Without much further ado, welcome, Bob Fraser.
Yeah, great to be here. And it's always so impressive to meet people like you, and here you are, accomplished ER physician and all that, and yet you're an entrepreneur on the side and taking control of your finances. I love it, because a lot of very accomplished people, career professionals, they spend so much time investing in their career, but they don't spend enough time learning how to manage their money. And maybe you invest $500,000 in your education, right? But if you take that same $500,000 and you can invest it in a 15% return for 30 years, it's over $33 million. It's worth more than your entire career even. And so I think it just makes a lot of sense for people to spend a little bit of time and learn how to be successful and put your money to work, right? And make your money work as hard as you work for your money. Yeah. So I'll tell a little bit of my story. So I was a computer programmer for many years, went to UC Berkeley, was a summa cum laude computer science major from Berkeley, which is one of the top schools, and really loved that. Became a programmer for many years, purely technical. I was a total nerd and very good at it and really enjoyed it. But I always had this kind of entrepreneurial itch, probably a lot like you and Kim, and decided to hang out my shingle. I did a few that didn't work out real good. And then I did one, started in my attic with my sister-in-law and $100,000 from mom, and ended up becoming a very big deal, ended up raising $44 million in venture capital and growing one of the fastest growing, in fact, it was the fastest growing business in the Midwest region of the United States in the late 90s, and grew it up to 300 employees and just an absolute rocket ship of a business. And I ended up winning the Ernst & Young Entrepreneur of the Year award that year, and then lost everything in the dot-com crash. And so during that transition, I became a finance guy. So I really learned to love finance and really became enamored with modeling and financial products, and then also studying economics. So one of the things that when economics cream you, maybe you get a passion for that. Maybe some doctors get a passion for that when there was a sickness in their family or something like that. And for me, it was like when I got confronted by an economic reality, I'm like, wait a minute, what's happening? Why is the earth doing this? Why would, dot-coms that are worthless become worth millions and hundreds of millions of dollars in 1999, and the same dot-com a year later it was worthless? And why would great dot-coms become worth nothing? And so I became really passionate about trends in economics. And then I actually went in after that and served for a few years for some large nonprofits on the board of directors and as chief financial officer, and traveled and spoke around the world, wrote a couple books. And then 10 years ago, started my investing firm, really met my partner, who was an expert in real estate, and started an investment business that we 10x'd in our first 5 years and 10x in our second 5 years, and hope to 10x again in our next 5 years. So yeah, 2 businesses, then we scaled them well, and really passionate about economics and trends, and passionate about helping people make money with their money.
Yeah. Okay. Welcome. So the format that this is usually takes place is that we'll do question and answer. And I have thought through some questions that I think that would be very beneficial to the audience to just hear your thoughts, where you're going, how to build wealth,
Sure,
like in the age that we're in right now. And then I'll leave a few minutes for question and answer, and then we'll go from there. So, Bob, beyond financial success, what are the core values and principles that guide your approach to business and like investing in general?
you really the economic underpinnings, is that what you're talking about? Because our business today is really more like a cross between a hedge fund and an investment company. So we put together investments for people to join and be a part of these investments, but we're not just any investments. We actually look for the trends and the economic kind of background. What do we think is going to work in this season? And it really came out of my history in the dot-com era, right? In the late 90s, it didn't matter how bad your dot-com was, it went up in value. And then in 2001, it didn't matter how great your dot-com was, it went down in value. Amazon was selling for 30 cents per share in 2001. So our thesis is it's more important to understand the timing than it is to actually pick the investment, but both are important. And timing is absolutely critical. And while you can't know the waves, you can know the tides. And so a lot of the tides are very predictable. And so we want to invest with the tide. So we first put our economic thesis together and our mega trends, and we study those and we update that really about 3 or 4 times a year. And then we identify the best places to stick money. And it really gives you an opportunity to make success and really not have it's like investing when you got a good vehicle, but also you have a tailwind at your back is really the key for us.
So when you said you're looking at the trends, what are some of the trends that you're seeing right now? And where are you thinking in every quarter when you decide what direction you guys are heading as a company? What does that look like?
And it's really big picture stuff. There's a couple easy ones. I'll tell you. For one, it's inflation, right? And inflation is here to stay. I've actually said that I think inflation is going to be a little bit higher than people think it's going to be for longer. And there's a few reasons for that. But so you want to have inflation-friendly investments. And the truth is, every single reality out there is both negative and positive, including inflation. Inflation is a wealth destroyer. It's also a wealth creator. All you have to do is get on the other side of it. So finding the best inflation protected investments. And of course, real estate is a great one. That's one trend that is very strong trend. And we're going to make a lot of money. You just putting our sail up in the inflation trade wind and letting our boat skate along. Another big trend we're following that is very powerful is a reshoring trend. I don't know if anybody read the Wall Street Journal. I think it was yesterday, talked about Bed Bath & Beyond and how they were moving their entire soap production back to America. And it was all in Ohio and off away from China. And we're seeing a massive reshoring trend. Companies spent about $2 trillion last year reshoring. That means moving their manufacturing operation back to America. And the economics are now ready for this. So for the first time in history, it's actually cheaper in many cases to manufacture in America, especially if you count supply chain disruption, if you count the cost of energy. People don't realize America is the largest oil producer in the world. And we're the only manufacturing power in the world that has energy security. We're the only ones that don't ship oil around the globe. So reshoring is huge. So how do you play? What's the best place to play that? So the first thing we do is we come up with our thesis. Then we figure out, okay, how's the best way to place money to work? And so we're looking at industrial real estate, big box real estate. We like investments where you really can't lose money, hopefully. And that if you're not going to lose money first, and then you can make a lot of money. There was no industrial real estate to buy, and we figured out that it was time to build. So we can build for $65 a foot and sell for $130 a foot 2 years later. So that's kind of the model. So we're developing industrial real estate. So those are a couple trends. Another big one is oil, energy. Most people drove to work today, right? And you're burning fossil fuels, whether you like it or not. And people think, I drive an EV. Great. Where does the EV get charged from? Oh, I plug it into the wall. Where does the energy from the wall come from? It comes from natural gas and coal, and entirely. And there's a little bit of renewables, only about 15%. It's fossil fuels. And fossil fuels have been massively underinvested for the last about 8 years. And we're going to see higher oil prices. And furthermore, it's a generational opportunity. Oil fields are on sale right now. You can buy them at unbelievably cheap rates, unbelievably, because of the whole environmental initiative. Nobody wants to. Institutional capital has fled because of the ESG initiative. So there's 3 trends I just gave you that are powerful trends. And so assuming we pick the right vehicles there, we've got 2 factors, 2 motors pushing us along. One, we did a really good job picking the right investment. And 2, we got this massive tailwind helping us. So that's really what we like.
Okay, it's really something to think about. Let me delve back a little bit into kind of when you started. What is a defining moment in your journey where you face some level of uncertainty and doubt? For some of us who are starting out, how do you navigate through that in terms of, am I going the right way? Is this the right path? Talk a little bit about that.
I've had many of those. I've been around a while. I remember sitting in my desk in 2009, about February in 2009, when the great financial crisis was unfolding and where they were announcing the TARP program, the big bailout program. And I'm thinking, I was running a hedge fund at the time and thinking, if they do not intervene, we are going to have a Great Depression right now. And things were really unraveling quickly if you were paying attention at the time. And there's just so much uncertainty, right? Around even today, right? It's the pandemic. Look at the uncertainty there. And I knew that was going to be short-lived and immediately was able to make great money in that. You have to go against the trends, right? You have to buy when other people are selling and sell when other people are buying, right? So you have to mitigate your fears and really know what's happening. The other thing that if there's something that's really helped me along the way is just really getting the big picture. There's so much noise. I can give you a dozen reasons right now why inflation is going to stay high. I can give you a dozen reasons right now why inflation is going to stay low. The key is to get all of that information and process it and figure out what's the most powerful forces, right? It's sizing all the forces. And to do that, you have to have a big picture. And if there's something that I seem to be pretty good at, it's processing through all that information and figuring out what is the big picture, what's really going on here, what's noise and what is not noise, right? And after 20 years of studying economics, and I just read so much, and there's always somebody saying something, right? And so to figure out, and after 20, 25 years of watching the markets and watching things go, you really can start to get a feel for what are the real important things. So remembering the fundamentals, remembering that fear doesn't make anybody rich. So you've got to have confidence when everybody else is afraid, and you got to be afraid when everyone else is confident. I'll tell you a funny story along those lines. So my number one indicator when I was actually running my hedge fund and did quite well in that for a season was my mother. So when my mother would call me, I mean, it happened all the time, Bob, it's time to back up the truck and buy everything you can possibly buy. It's going up from here. I'm like, thank you so much, Mom. That was my sell signal. That was my sell signal to sell everything. And when she would say, get out of the markets, go to cash, we're going to bunker down, that was my buy signal. And emotions are not your friend. And the markets will just rob you blind if you can pay attention to emotions. So getting yourself separated from the emotions and really being able to do good fundamental analysis will really serve you well.
A lot of the people in the audience are busy professionals, and a lot of them have never heard about some of the alternative assets that you invest in, some of the things that you talked about. So what is the best approach to start? What's the best approach?
Such a great question. And the world has sold us on mainstream public investments. And these are, of course, let's pick stocks. Here's the problem with stocks. And it's just what I figured out. Why would Amazon be worth billions of dollars on day in 1999 and then worth nothing 1 year later? And it's not. The value doesn't change. It's only the perception of value. The public markets are basically run by sentiment and narrative and emotion, and it's nuts. And so that's when I got sick of the public markets. I don't want anything to do with public markets. I hate the public markets. I want to have things tangible things that I can control, that I can know, like real estate. I love real estate. What's the big mystery? You buy an apartment complex, you collect rents, it's got value, it's not going to disappear. You can't wake up and there's an announcement from a public company, by the way, it's all worthless now. And that's what happens in the public market. Some announcement, oh yeah, it's all over and we're going away. That can't happen to a real estate. I'll just give you another example. people think, oh, I'll buy real estate in the public markets, and you buy what's called a real estate investment trust, right? Apartments REIT or something. The problem is right now you're paying about $5 for every dollar worth of real estate you're getting. So if you buy the apartments REIT, the price to book value ratio, the price of the share versus the book value of the share, the book value is the amount of real estate you own, is 5x. So really, if you buy a REIT, you're buying a sausage. You're buying a real estate sausage. And that's the reason why they fluctuate so much, because it's worth 5x more today, then it's worth 4x, and then 1x, and then 10x. And it's, I just want the X. I just want 1x. I just want one. If I want to buy a piece of real estate, if I want a steak, I'm going to buy a steak. And if I want a sausage, I want to buy a sausage. And so really, alternatives are far superior. They're superior in terms of returns. We're superior in terms of loss prevention, superior in pretty much in every single way except one, and that's liquidity. So a lot of these things you're locked up for 3 or 5 years. But people overestimate their need for liquidity. Okay, if you've got $5 million, do you really need all of it liquid right now? You may just have to what? Go run to the beer store, and you don't need the full thing to be liquid. Figure out what your liquidity needs are, and then put the rest in alternatives. Alternatives are just superior. And this is why we have a podcast called Invest Like a Billionaire. And it's teaching people, it's trying to make the private markets approachable to normal folks. And like billionaires have 50% of their wealth in private investments. So that means, hey, I'll go buy an apartment complex. We'll form an LLC. I'll let you come into it. So a bunch of investors, we get 50 investors in there, put in a couple $100,000 each. We form an LLC. We make the money, and boom, that's a private investment. And they really are going mainstream. The numbers are just insane. But more and more people are turning to private alternatives, and they're just far superior.
So I'll share a little bit of a personal story. So for a long time, I only invested in stocks and 401k. And so like you're talking to me, and until recently, I heard about multifamily apartment investing, and not recently, but a few years. And I learned that it was a way to build wealth. And so I jumped in just as a passive investor, just someone who said, hey, let me check this out. And then I got proof of concept. And I wanted to bring that to our professionals in and out of the healthcare field. I wanted to let them know that this was an opportunity that was available for us. And that's how Phoenix was born. And so I understand what you're saying in that a lot of the times all we're doing is stocks, but we need to be more open to these alternative assets, because I truly think, and I do believe that it's a way to grow wealth. And just hearing that from you just solidifies it. And so how do you identify exact things that you're going to invest in? And then how do you evaluate it? So how do you identify it? And then next steps, what would I do?
Yeah. And well, we do a lot that a limited partner might not do. So someone who invests in our stuff, most of our guys invest because they trust us, right? And they know we've been around a long time, and we're large, and we do a very good job. We're very professional. But first off, we get our thesis, our big economic thesis. What are the big picture? Does it fit our theme? If it doesn't fit our themes, we're not going to invest. It doesn't matter how good a deal it is. Then we look at a lot of deals. We probably underwrite every quarter 50 deals. And underwrite means we actually build models. We actually go build investor models. We go and look at the performance, look at the pricing, look at the rents, look at the markets, do all the demographics, look at everything. And we'll evaluate the sponsor and see if they're credible, if they know what they're doing. We'll do tons and tons of due diligence, and we might be passing on most of them. And then a couple deals that we like, we'll do those. Other deals we initiate. So in oil and gas, we knew we wanted to play in oil and gas. We knew that's the kind of it's an opportunity of a generation. It really is. And so we spent a year doing research to try and figure out how to play in this and just figure out how to do it. And finally, we're able to stick the fork in, found an energy analytics firm that has been doing this for 40 years and partnered up, and we're just got some incredible deals that are really stuff that's not really generally available to private individuals. A lot of this stuff is owned, by big private equity guys in large families that are holding it very tight. And so we're making it available, democratizing it, if you will. And so it's that process. Then we go in and really do due diligence on the assets hardcore, look at the legal underpinnings, the structures, make sure everything is great. And assuming it passes all that, then we offer the deals. For limited partners, it's really, I invested my own money as a limited partner too, because I had to place my own capital, and there wasn't enough deals that we were doing at Aspen to do it. So I had to go outside Aspen and place a lot of the stuff. And you can't do that level of due diligence, unfortunately, or fortunately, you have no life. So really, you ultimately have to pick people you trust at some point, and people that are reputable, and they're not that difficult to find. There's a lot of people out there that are reputable and doing a good job. And that's really the thing, is just trust. But then I would say the other thing you got to do is start to learn too. So it's great to trust. Make sure you learn. When you get the reports, you get the data rooms and the due diligence. What happens a lot of times, we set up a data room for every one of our investors. Go and here's all the data. You can go look at it. And if it doesn't make sense, go ask questions. We don't mind that. And good folks don't mind you asking questions. So go take the time to learn. And what happens after you do 2 or 3 or 4 deals, you start to get a feel for what good deals look like. You actually start to learn, you educate yourself. And that's what's really important, is to learn how to recognize good operators, good deals. And it's okay to dip your toe too. We have a lot of investors that come in, give the minimum today, and now 5 years later, they're all in, which is great. That's fine. It's your money. You need to do something that you're at peace with, that you can go to bed at night and sleep. You don't really want to make the bet where you put all of your chips on one roulette slot there and then pray like heck. That's not a strategy. You really don't want to do that. I'd start slow and learn as you go, but it's not rocket science, and it doesn't take that long. Most of your listeners are probably very sharp people. And honestly, if they'll just take a little time and read the reports coming out, talk to the investor relations people, read the data rooms, ask a lot of stupid questions. Yes, that's okay. That's the way we all start. And it won't take long to learn, and then you'll get really good at it. I know a lot of professionals that this is their main gig now, that they left their professional gig and are making their earn money, and they're so good at it. And they just self-taught by just rolling up their sleeves.
That's true. I can 100%, 1,000% attest to that. So now let's talk a little bit about risk. So a lot of alternative investments, it can be perceived as riskier. How do you manage that risk? Like, how do you talk to investors? What are some ways to mitigate that and even combat that? Yeah.
There's so many risk elements you can talk about, right? If you get your brother-in-law wants to start up a restaurant and wants to borrow money from you or get your investment, now that is risky. Okay. The chances of that working are nil or very close to zero. And your losses are pretty much going to be 100%. And I get venture capital deals all the time. People saying, I just got one in the mail today. Really looks cool. Guy's got a sniper scope. It looks amazing. But I don't know anything about sniper scopes. And again, it's the downside is 100%. And I don't know the guy. So that's different. So it's different when you look at, let's say this is an apartment complex or something. It's tangible. It's not going to go to zero. And then at that point, when you know you have a hard asset, you just want to make sure it's not a Ponzi scheme, and that's not that difficult to do. And then just look at the business plan. Does it make sense? Look at the numbers, make sure the numbers make sense. Get someone else to look at it too, someone who is an experienced investor to look at it and make sure that it makes sense. But like I said, we've done so many deals over 10 years. At some point, our investors just, whatever you guys, they used to be a lot more picky, and now they're like, whatever you guys pick, we know it's great. Which, that's okay too. I don't mind, but I really don't mind people asking the questions and pushing on the things. But the risk is, what is the risk of an apartment complex, right? And the risk is that the debt, primarily it's over leveraged. That's really the main risk, or it's poorly operated. Those are the two main risks. And even there, you're not going to lose 100%, right? It's be super rare to lose 100%. So you may not make your what you expected, but you shouldn't lose anything. And the first rule of making money is don't lose money. And if you've been in the stock market, that's sure not easy. And people say the stock market, it's risky in the stock market. Gosh, I've seen too much in the stock market. I have a chart I could show you that shows the number of decreases of 50% or more in various stocks. And it's enormous. It happens every few years where you get wiped out. It's hard to say that an apartment complex or something as benign as that is really as risky. What you do have is the public companies are big. They're bigger. They're generally not going to be a lot of fraud. And you can have incidents of fraud in smaller deals, but then get reputable people, do background checks, and find reputable operators. And they're not that hard to find. So that mitigates 90% of your risk.
I agree with you, to not be afraid to ask questions. Like, this is your investment. This is something that you're putting your hard-earned money into. If you meet an operator, an investor, or who's someone, a sponsor who doesn't want to answer the questions, who doesn't want to give you the background check, you should think twice about it.
Oh yeah. Oh yeah. If they won't show you under the hood, walk away. They won't open the kimono and show everything they got, walk away. They got secrets. What's a secret? Run.
So when we started talking a little bit about market fluctuations, and I know that this is something investors struggle with, like emotional decision making. What mindset, can you share with us like some of the mindset and emotions that we need to hold on to during some of these turbulent times, which you could say we're in?
Yeah. And the best thing is just to have a long-term perspective. The truth is, if you look at the stock market, it goes up and it has a lot of volatility, but if you're patient, you're going to make money in the stock market. And if you're diversified, and, and the same thing now with all the recession fear and everything else, inflation is the great savior of real estate, for instance. And if inflation continues at the pace it's going, prices of apartment complexes or any real estate are going to double in about 15 years. That's at these low inflation rates. Sorry, that it's actually faster than that. Prices double in about 10 years. All you got to do is just weather it and keep riding, just ride that thing. Let the inflation keep working that asset higher. And so you've got to keep the long-term perspective in place and practice diversification as well, right? Don't put all your eggs in one basket. Don't place the bet, right? And sprinkle your money around. And yeah.
Okay. So we've talked about success stories. We've talked about, like in the last 10 years, where you guys have been. Is there a specific investment decision that you made or that you didn't make, or an opportunity that you passed up that kind of still haunts you today?
Sure. I remember being in 2009 in January, February 2009, the whole year of 2009, and Miami beachfront condos were going for $35,000. And they're not making a lot more of those. And everybody was terrified. If you can remember, everybody is terrified. I remember my daughter, I convinced her to buy a 3-bedroom, 2-bath condo in Kansas City out of foreclosure for $65,000. Yes. And you know what her response was? She says, Dad, I'm terrified. What if it goes down? Right? $65,000, 3-bedroom, 2-bath condo. And I said, well, honey, even if Zillow says it's worth $1, do you really think it's worth $1? And the truth is, can you rent it out? She said, yeah. Okay, what can you get? Oh, I could probably get about $1,200 for that. Okay, what is that worth to you? What would you be willing to pay for an investment that earns you $1,200 a month? Oh, so you can value it a different way. You value it based on its cash flow. You follow me? And then you say, gosh, if I'd be happy with a 10% return, you divide the cash flows annually, 12, which is 14,000 divided by 10, it's worth $144,000 according to your cash flow analysis. You just do a simple cash flow analysis. If I bought it for 144, then I would get a 10% return. You follow me? Now it's selling for 65. What does that tell you? It's worth something. And then, by the way, what does it cost to replace that? It probably costs about 200 to replace it. So I think 65 is a good value, regardless of what Zillow says and regardless of the fear. So that's a good example of when, boy, I didn't have a lot of money at the time. I was approved before I'd started my business, but boy, I wish I had to back up the truck. It's the way I feel about oil and gas right now. I'm looking at these things. These massive oil fields are just people are giving them away for a song, and they're not going to. The world needs fossil fuels. There's these kind of what I call generational opportunities that seem to come once every 20, 30, 40 years. And that was one. And so those things, you wish you had the foresight to do that. Or buy Amazon at 35 cents a share, right? Back in 2001. But I was licking my wounds at that point. and I didn't have 2 shekels to rub together at that point. So a lot of times the opportunities don't align at the same time you have the cash. Or that you're so bloodied and wounded you can't even see straight. You can't even make a decision. That was where I was at that time. You talked a little bit about oil and gas, but what are some emerging trends or like disruptive technologies that you believe that will significantly impact the future of alternative investments? Gosh, I wish I was a doc like you, right? And then I think you should tell me. I think biotech, you look at what's happening in biotechnology. I don't know how read you are, but I read enough to know that it's just incredible the discoveries they're making. And almost weekly, there's breakthroughs in research and technology. And I actually don't invest in biotech. I don't do it because I can't get my head around it. I can't understand it. And it's very risky to me because it seems like it's a big cash burn and it's either this big win or a big zero. Those are so hard to invest in. To me, so actually, I got a degree in venture capital, if you will. One of the very first investors in my .com was one of the very famous VC guy. And this is what he said about venture capital. He said they expect 1 in 18 deals to work. 1 out of 18. And he said they only invest in 100x deals that they think can go 100x. And if something doesn't go 100x, if it goes 20x, it's a loss. They don't care about it. They're only looking for the 100x deals. That was a guy from Savin Rosen, one of the very first famous tech VCs out of Dallas. And so so what does that tell you? So if you're going to invest in biotech, then you probably need to place your capital in 50 deals. If 1 in 18 is going to work, you certainly don't want to do it in less than 20. Yeah. You follow me? That's just not my game. But that could be your game. Sprinkle around a little bit of cash in all these deals. and hoping for the moonshot. To me, I don't understand it enough. I don't get my head around it. Biology was the one science course that I avoided. And so I stay away from biotech, but biotech is huge. It's massive. You look at material science, it's the same. There's all these breakthroughs in battery technologies and these kind of things. I'm looking at electric airplanes. They're amazing. Air taxis, they're going to be real in your lifetime. They're going to start flying. Air taxis are going to start doing short hops. You've seen the drones. Imagine flying in one. A little scary, unpiloted, and yep, it's going to be lots of ups and downs. But it's going to revolutionize everything. I actually looked at investing in one, and one of these little air taxis, they're cost about $250,000 to buy one, and a couple $100,000 to operate it, but it would make $15 million a year just shuttling back and forth in 30, 40-minute flights with hot swap batteries. I'm like, gosh, that is just so darn cool. So I think there's no shortage of disruptive technologies. You really have to pick something. To me, I don't invest in a lot of that stuff because I like stuff that's more predictable. I want to have levers. I want to be in control. I don't just want to crapshoot. I can't do that, right? Where you put all your money in one color and you just hope it hits. And then I can't do that. That's, to me, not investing. So I'd rather do things that are much more predictable. I want to earn 15%, 20% returns on my money and never lose a dime, right? That's what I try to do. And it's doable. You can earn 15 to 20% returns. And then it's the easy way to make money. Was it Einstein said the greatest, what does he say? The greatest, I can't remember, but the quote about compound interest was the greatest math equation of all time. So really get compounding, working for you. And to do that, you can't lose. But I do know there's VCs that make a lot of money. It's just not my game.
And you said something important, which was time. Whatever it is, it's like you put in the time, like even with compounding, like it's over time. So whatever we're looking at, time is in our, like even what you said with the stock market, if you just put enough time into it, it will grow, it will flourish. And you talk, and a little bit like for me, something that's very interesting for me right now is artificial intelligence. And I think that this is the time to jump on that and to learn and to educate yourself, because I think you truly could be the 1% of the 1% who understands this and who can use it as a lever in the next 5.
Right. I am actually a computer scientist. And so I do understand some of this stuff. And I'm a crypto expert as well, but I'm not a big crypto investor, by the way. And crypto, for all of its wonders, really lacks utility, right? There's not a lot of things you can do with it, right? Unless you're in a totalitarian regime like China or something, you're trying to protect your wealth, or you're a drug dealer. Then it does have a lot of utility. Besides that, it really doesn't. AI is amazing, but I think it remains to be seen who are the big winners. So I was actually at the very beginning of the .com revolution back in, remember when Al Gore invented the internet? And yeah, I was there. And of course, that's tongue in cheek for someone that doesn't know he claimed to have invented the internet, but I was there, and it's interesting. So think about the very first companies that came out in the internet space. Who were they? Where were the big .coms? You won't even remember them.
I'm going to say they're gone.
They're gone. Netcom, AOL. And so what happens in these disruptive technologies, a lot of times the first players are not the big winners. So you remember MySpace? Yes. Remember MySpace? They were the big guys way before Facebook, and they just got wiped. So what's happening in this hugely disruptive technology, a lot of times the first players are not the guys that actually win. And because there's cool technology does not mean there's good investments, right? I think we equate that. I remember one guy telling me aviation, I'm an aviation enthusiast, right? I'm a private pilot. And he said, aviation has for 100 years has been a great technology, but it's been a lousy investment. I think it's really been true. You look at the bankruptcies. I don't know if anybody's tracked the aviation industry, it's just full of bankruptcies and problems and this and that. And the same with mining. It's like mining is a great technology, but that's just dirty, ugly industry. And they don't tend to just go up a lot. So you've got, just because there's great technology doesn't mean there's great investments. And you've got to make a distinction. A great investment has to be something that's really financially driven by market leaders with dominant market strategies. And you just never know who's going to win that game. So I do think it's interesting, but I tend to be much more cautious. And I'd rather invest in things that are a little more proven, right? Rather than things that are just moonshots. Because everything can sound like a moonshot. It sounds so good, especially to the unwashed. You know how many people I know who are, I'm a technology guy, right? Who are buying technology and they get bamboozled by the hype and they can't see it because they don't know what I know in technology. I imagine you see it in medicine too. There's this latest wonder drug and they get all hyped about it and somebody's going to go off. Your mom or dad or your brother or someone's going to go off, brother-in-law is going to go off and invest in this thing because they heard the hype and you're going, wait a minute, you don't know. That's not what it seems. It's a great sales pitch. So it's very easy to bamboozle people that don't know the actual area that they're in. Yeah, I just can't be an early adopter as an investor in technology. I'm going to be a late adopter and I'm going to make my 15% returns. That's what I want to do.
I like that. As we kind of end, I just wanted to get a little bit more personal. Have there been any personal sacrifices that you've made in pursuit of your entrepreneurial ventures? How do you balance your professional aspirations, your personal well-being, family? What does that look like?
That's such a great question. And I think it could have happened had things not taken the turns they did, but it didn't happen in my case. I got booted off the .com ride as a 30-year-old with 4 young children at home. While I got a whole lot more time with my kids at that point, and they got involved in the church and really did they began to really thrive in that period. And I was there. So I think my fortunes, for whatever reason, turned so that I didn't have to make a lot of sacrifices. But I do know a lot of people that have, and it's sad. I think tomorrow I'm about to celebrate my 39th wedding anniversary with my wife, and we just adore one another. Nkem knows her, and we're just cheesy, and we're just very much loving each other. And I got 4 beautiful children who are all married and very healthy. And what's that worth? So it definitely makes sense. Don't always value the quality of life. And I don't know if I have been perfect at mitigating all that myself. It just, the way life turned, it just worked in my benefit at the time. And now I'm so glad. I tell you, those years are gone. Those years of the years with the children, and they're all moved out of the house, and how precious they were. And I'm so glad I was able to make memories in that time.
What legacy would you like to leave behind regarding your impact, like on investment in the community and the lives of others?
Yeah, it is my age. You definitely start thinking about that. We can't take anything with us, right? And ultimately, so I really want to change my city. I want to change the racial divide in my city and the wealth and the poverty line that is just so wrong, feels so wrong to me. And I want to make those changes. I want to help the faith community to grow and mature. And I want to do, there's a few dreams I have, a few things I really want to help people grow and advance, and putting plans in place to leave a legacy behind right now.
Thank you so much. This has been a wealth of knowledge, and I'm hoping that everyone really benefited from it. Before we jump into questions, Bob, do you have any active deals you want to let our community know about right now? Anything that you guys are up to that you're doing?
Sure. We have a real estate fund that we've just opened up, and our oil and gas fund. It's almost fully subscribed, but yeah, you can jump in at aspenfunds.us and jump in there and get a piece of that. It's just, honestly, I've never seen anything this good. I'm backing up the truck personally, dumping everything I own in it. Maybe I'll sell my plane even and put it in there. Maybe not.
So thank you so much. And I'm going to jump into questions in a second, but like for everyone else who I haven't met, I'd also love to who's interested in joining the Phoenix investor community, I'd love to schedule a call and meet with you guys and just chat a little bit and see what your financial goals are and how we can help. I'll put some information in the chat, but let us jump into questions. And if you have some questions as we're going through, just drop them in there. Someone asked, what are your thoughts on Bitcoin?
Okay. I'm a bit of an expert on Bitcoin, and it really doesn't have a lot of utility. People say it's going to be the new dollar. It's a joke. I don't know if you realize, but there's only about less than 10 transactions per second that can happen in Bitcoin, and it's limited. The Visa network processes 1,500 transactions per second. So Bitcoin is amazing, though, because it's just the granddaddy. It's never going away. I don't think it's going to have a lot of utility, and I do think it's going to go up in value. So I think it's going to go up in value, but I don't think it's going to change the world. If there is a crypto that has a chance to do anything, it's Ethereum, which what they did with Ethereum, they're brilliant, is they built a crypto infrastructure. So Ethereum, if you look at a lot of the tokens and other things on there, they're built on top of the Ether network and the Ethereum network and the Ethereum blockchain backbone. And they have recently fixed Ethereum from the proof of work to proof of stake. So instead of having computers running ungodly amounts of power just to generate a Bitcoin and Ether, they've changed it all to proof of stake now. So it doesn't require this massive energy suck, and they've fixed it. So the guys are running Ethereum really know what they're doing, and I think it's probably going to be the winner. So I have a little bit of Ethereum. Yeah.
Okay. Anthony asked, when you invest in a business, do you make your final decision based on the numbers or the person?
It's got to be both. If both aren't checked, I'm not touching it. So I tell you, if the numbers are there and the person's not the right person, they're not a good operator, they don't do what they say, they're a little bit squirrely, it ain't worth it. It just ain't worth it. There's too many good deals out there. Pass. If you don't get check marks, green check marks and everything, just don't put your money there.
Okay. Erica says, what are your top resources people should use to learn?
Yeah, such a great question. Find experienced investors, find investor clubs, find experienced investors, put a little money to work in a good operator, and then read the reports they're giving you, read the information. I find if you have a little bit of stake in there, you pay a lot more attention, right? So listen to some podcasts. I think our podcast is great. It's called Invest Like a Billionaire. You can go to thebillionairepodcast.com. One of my favorite resources, I read cover to cover every day. It's the Wall Street Journal, and it's just no better paper, and just gives you a real good broad picture of what's happening, and it's easy to digest and easy to read while you're eating your breakfast or your lunch or whatever. So those would be a couple of my thoughts.
Erica, I agree with, like, when you have meat in the game, like when you feel like you have something at stake, like you're going to learn. And so that I agree with, if you join as a limited partner, you start learning, you start seeing when they send you financials, you start asking questions, you show up to webinars like this, you meet people, you network, conferences and books. I'll send you some books that I think that are really helpful, and then go from there. Adira asked, any simple book you could recommend on investing? I will, everyone who's here, I'll put a list together and send you.
There you go.
Things that have helped. So I'll just send an email out with some books and some resources that I think has been really impactful to my journey.
I would just say maybe Rich Dad, Poor Dad, and hopefully everybody's read that, but it's just such a basic book. And don't get hung up on single family real estate. Seems like that's where everybody gets stuck on. There's a lot of great opportunities, but what he shows you is how to make your money work for you. And that's the right approach. Look at your money. Look at your money as, I like what Mr. Wonderful says on the Shark Tank. My little money, they're little soldiers. They go out and do battle for me. So look at your money as little soldiers going out and doing battle. And so Rich Dad Poor Dad is just a fantastic read, very easy read, and just a wonderful, delightful book, and very easy to get started. But again, don't get hung up on his single family investments.
Okay. Erica says, congratulations on your wedding anniversary. And then Jennifer says, first of all, you're pretty amazing. You do a lot of things. I'm a new resident doctor and I'm interested in joining a syndicate, but I don't have much money right now. Is it too risky to join syndicates that have a minimum investment of $5,000, or should I just wait until I've saved up around $20,000 to $30,000 to invest?
Most syndications require you to be an accredited investor, and that means $200,000 a year in income or $1 million net worth. So you might not be qualified yet. I'm sure once you get going as a doc, you will be. So it's really up to you. If it were me, I'd probably say, hey, just jump in with $5K just for your learning's sake. Just jump in and learn. And it's very difficult to find, but there are some firms that take non-accredited investors. So at our firm Aspen, because we love the little guy, we try to do 1 to 2 non-accredited deals a year where you can place smaller amounts of capital. And they're very difficult to do. The SEC makes it very difficult for us to do it. We're only allowed 35 non-accredited investors. And to do that, we have to have a relationship with you. So if that's the kind of thing, get to know the firm, have conversations, get to know them, have a couple conversations. And then when a deal comes, we can let you know about it. But they're very difficult to find as a non-accredited. But I'm saying go for it. It's $5K, stick your money in, and you look at it as tuition.
I agree with that. I think that honestly, you jump in and you start learning. And then because you're in, you can ask questions. You have the right to know everything, like literally everything. And so I just think it's a great way to start learning, start meeting people, start figuring out how things work, the ins and outs. And so when it's time to make a bigger investment, to you, it becomes a no-brainer because you're like, I got it. I got proof of concept at 5,000, 50,000. I can see my money growing so much more at that price. So for me, I agree with Bob. I think we say go for it. I think that we're done with questions, and it's perfect. It's 7:01. Bob, I just want to say thank you so much for taking the time to come and just share tons of nuggets of wisdom, of wealth information for us to be able to grow and build wealth, which is what this is about. And then further, that is impact. And that, hearing your story, I know that there's a lot of that in that. So I'm just grateful. And I'm grateful to the whole community who jumped in. Thank you for spending the hour with us and just jumping in with us. So I'm really grateful. And I want everyone to have a great evening.
And hats off to those who would take an hour of their time, who are busy professionals, but they're thinking about how to put their money to work. So you're absolutely off on the right foot. And if you take the time to invest and to learn how to do this, you will be successful. You will learn and figure it out. So hats off to you. You've taken a great step.
Yeah, so everyone, I think I just put our website, and then Bob told us his website. So if you have questions at all, comments, and I will send out the link I'll send out the resource to everyone here. So everyone have a great evening.
Bye, everybody.
Thank you.